Hello viewers, welcome to my channel. I'm Hashim Ali Khan. Already we have completed 16 problems on computation of capital gain. So if you have watched the earlier videos, definitely you got a good command on how to compute the capital gain, income from capital gain, by applying the provisions of Income Tax Act 1961 for the assessment year 2021. So I have uploaded the introduction part, then starting 2-3 videos I have uploaded solving the problems on computation of capital gain. If you have not watched those videos, I suggest you to go to the playlist of my channel. Select the subject Income Tax 1 for the assessment year 2021. Select the topic. There are so many topics I have given: introduction to Income Tax Act, income from salary, income from house property, profits and gains of business and profession, and this capital gains. So if you want a good command on capital gain, select the topic capital gain. Watch the video till the end. Definitely you can get a lot of knowledge from these videos. So if you are new to my channel, I suggest you to go to the playlist. So many subjects I have uploaded. Select your subject, select the topic, watch the video. So before starting the next problem, problem number 17, I expect my viewers to have a printout of the problems which I have given in the link under my description. So keep the problems ready and start watching the problems. I am reading out the 17th problem. See the 17th one. Mr. Avtar Singh purchased a plot in 2002-2003 for rupees 4 lakh. SSC, Mr. Avtar Singh purchased a plot of land in the year 2002-2003 for rupees 4 lakh. He sold on 15th November 2019. Our current previous year is 1920 and the assessment year is 2021. So during the previous year 1920, on 15th November 2019, for rupees 14,80,000, and he paid 20,000 as brokerage charges. So sale consideration received is 14,80,000 and brokerage transfer expenses are 20,000. He invested rupees 2 lakh in the bonds of National Highway Authority of India and rupees 3,10,000 in bonds issued by Rural Electrification Corporation Limited. That means after selling the plot of land, he has invested in specified securities for deduction, for exemption under section 54EC. So Income Tax Act has given one section, section 54EC. This section says when an SSC sells land or building or both, and from the consideration he has invested in specified securities. The specified securities are National Highway Authority bonds, bonds of National Highway Authority Limited and Rural Electrification Corporation Limited. These are specified security. If he has invested, he will get the exemption. Compute the taxable amount of capital gain if CII, cost inflation index, for 2002-2003 is 105 and 2019-20 current previous year index number is 289. That's all. Very simple problem. See the solution here. Computation of LTCG of Mr. Avtar Singh for the assessment year. Consideration received 14,80,000, sale proceed. From this we deduct transfer expenses, selling expenses, brokerage paid, deduct. Net consideration 14,60,000. From this we subtract indexed cost of acquisition. Actual cost of acquisition was 4 lakh rupees. At 4 lakh rupees he has purchased during the year 2002-2003. So index number for 2002-2003 is given in the problem 105 and current previous year index is 289. So into 289 by 105, indexed cost of acquisition 11,59,952. Subtract, we'll get capital gain 3,59,048. From this, exemption under section 54EC. Working note, I'll give the explanation in working note, then long-term capital gain. In working note, the SSC sold a plot of land and invested in bonds of National Highway Authority of India and also Rural Electrification Corporation Limited. So exemption under section 54EC is allowed to the least of the following two amounts. Actual amount invested, 2 lakh rupees he has invested in bonds of National Highway Authority of India, 2 lakh. And 3,10,000 rupees he has invested in Rural Electrification Corporation. So total investment 5,10,000. And fixed 50 lakh rupees. According to Income Tax Act, fixed amount is 50 lakh. Whichever is lower is allowed as exemption. The lower is 5 lakh 10,000. The exemption should not exceed the amount of capital gain. Lower amount is 5 lakh 10,000. But if we take the exemption of 5 lakh 10,000, you will get negative LTCG. LTCG should not be negative on account of exemption. The exemption will be limited to the capital gain. Limited to the capital gain. So he will not get the exemption of 5 lakh 10,000. He will get the exemption up to capital gain. Capital gain is 3,59,048. Deduct LTCG will be nil. That's all. So this is problem number 17. Now 18th problem. From the following information of Mrs. X, compute taxable capital gain for the assessment year 2021. Cost of acquisition of residential house in 2001-2002, rupees 5,50,000. The assessee Mrs. X, she has purchased a residential house in 2001-2002 for rupees 5,50,000. Sale proceeds on 2nd August 2019, current previous year. She sold it for 21 lakhs. Cost of construction of new residential house. The house was constructed during 1920. The house is used by Mrs. X's sister, 4 lakh. That means she sold one residential house and from the proceeds she has purchased another residential house. So she is eligible for exemption under section 54 because the assessee sold one residential house and purchased another residential house within the stipulated period. Then the cost inflation index in 2001-2002 was 100 and 2019-20 it is 289. Current previous year 289. Now see here. Computation of LTCG of Mrs. X for the assessment year. Consideration received 21 lakh sale proceed. No transfer expenses are there. So net consideration 21 lakh. From this we deduct indexed cost of acquisition. The indexed cost of actual cost 5,50,000. When she has purchased in the year 2001-2002, at that time index number was 100 given the problem. And current previous year index 289. So multiply 15 lakh 89,500. Subtract, we'll get capital gain 5 lakh 10,500. This is the capital gain. Now exemption under section 54 because the assessee sold one residential house and purchased another residential house within the stipulated period. So exemption under section 54 is allowed. Here, the assessee sold one residential house and purchased another residential house within the stipulated period. So exemption under section 54 is allowed to the least of the following two amounts. The two amounts: cost of the new house 4 lakh or capital gain amount 5 lakh 10,500. Whichever is lower is allowed as deduction. Lower is 4 lakh. So exemption under section 54 4 lakh. So deduct 4 lakh 1 lakh 10,500. This is the long-term capital gain taxable. So this is the end of problem number 18. Come on, now we'll start the next problem. Problem number 19. Sri Kiran purchased a building for rupees 3 lakh in October 2001 and gifted it to his daughter Mrs. Jeevani in January 2003. So actually the building was purchased by Sri Kiran in the year 2001 for 3 lakh and later on during the year 2003 he has gifted it to his daughter Mrs. Jeevani. So presently the owner of the building is Mrs. Jeevani, right? So Mrs. Jeevani got the property through special mode of transfer, that is gift. So according to the provisions of Income Tax Act, if an assessee got the property through special mode of transfer, then cost to the previous owner will be the cost to the present owner. So whatever cost incurred by Sri Kiran, the same cost we apply to Mrs. Jeevani. Now the other particulars are as under: some additions were made, improvements in January 2003 for rupees 2,50,000 and renovation of the house, capital expenditure in August 2005 for 50,000. So two improvements are there. Improvements in January 2003 2,50,000 and improvement in August 2005 for 50,000. If the house is sold on 15th Jan 2020 for rupees 22 lakh 10,300. Selling expenses 35,000. If cost inflation index for the year 2001, 2002 is 100, 2002, 2003 is 105, and 2005, 2006 is 117. Calculate capital gain. So the new point in this problem is the SSC is Mrs. Jivani. She got the property through special mode of transfer, that is gift. So whatever is the actual cost to the previous owner will be applied to the present owner. That is the only new point. Now see, computation of LTCG of Mrs. Jivani for the assessment year. Consideration received 22 lakh 10,300. Sale proceed. Sale consideration received. Selling expenses, transfer expense are 35,000. Subtract net consideration 21 lakh 75,300. From this we deduct first of all indexed cost of acquisition. What was the cost of acquisition to the previous owner, Sri Kiran? He purchased the building for 3 lakh. 3 lakh. So this is the cost of acquisition. Into current previous year index. Current previous year is 2019-20. For the index number for 1920 is 289. Divided by the index of the purchase year. When it was purchased in the year 2001, 2002. So 2001, 2002 it was, the index number was 100. So 8,67,000 is the indexed cost of acquisition. Now 2 times improvements are made. The indexed cost of improvement 2003, 2004. Some additions were made, incurring cost of 2,50,000. Into 289 divided by 105. 105 for this is the index of 2003, 2004. So 6,88,095. Now indexed cost of improvement 2005, 2006. Again some capital expenditure is incurred on renovation. Then 50,000 into 289 by 117. 1,23,504. So add up all the three. 16,78,599. Deduct it, you will get long term capital gain 4,96,701. That's it. In note, in working note, you should write down the SSC Mrs. Jivani got the asset through special mode of transfer, that is through gift. So the cost to the previous owner will be the cost to the SSC. That's it. Now see the next problem, 20th. During the previous year relevant to the current assessment year, Srimati Swapna sold the following assets. Compute the income from capital gain and tax liability if income from other heads is nil for the current assessment year. Particulars are given: house let out for commercial, open land in city, and gold. That means during the current previous year, the SSC Srimati Swapna, she has sold 3 assets. The first asset, house, which was let out for commercial purpose. Secondly, some open land is there, that also she has sold. Gold, that is also sold. Now date of purchase is given 21st March. House was purchased on 21st March 1999. It is more than 2 years. For house property, if the asset is held for more than 2 years, it will be long term. Here it was purchased in 1999 and sold during the current previous year 2019-20. It's a long term. Similarly, open land in city, it was purchased in 1st May 2005 and current year 2019-20 he has sold, again long term, more than 2 years, more than 3 years for open land. Then gold, for gold purchased on 4th May 2009 and it was purchased during the current previous year 19-20. So again more than 3 years. So it is long term. So first of all we have to decide whether the gain is short term or long term. So date of sale is given, purchase price, cost of acquisition, then sale price, consideration received, transfer fees, selling expenses. Cost inflation index for 2005-2006 is 117 and 2009-2010 is 148. That's all. Now see carefully. Computation of LTCG of Srimati Swapna for the assessment year. House, land, gold. 3 columns I have opened. Now consideration received, sale proceed. The sale price of house 25 lakh, land 20 lakh 85,000, gold 1 lakh 28,500. From that we deduct transfer expenses, selling expenses. Selling expenses are 0.5% for house. So 0.5% of 25 lakh you will get 12,500. Similarly 1% on land. So 20 lakh 85,000 into 1%, 20,850. and 2% on gold. So 2% on 1,28,500, 2,570. Subtract net consideration we got. Now indexed cost of acquisition. The house was purchased for rupees 10 lakh. So current previous year index 289 divided by index number for the purchase year. Any asset if it is purchased before 1/4/2001, the index number will be taken as 100. Already we have discussed in the theory. So many problems we have applied. So here house was purchased in 1999. So before 1/4/2001. So the index will be taken as 100 or divided by 100. 10 lakh into 289 divided by 100, 28,90,000. Similarly, land, 7 lakh rupees into 289 divided by 117. 117 is the index number for which year? 2005, 2006. So 17,29,060. For gold, 38,000 is the purchase price into 289 divided by 148. 148 is the index number for 2009-2010, because the gold was purchased on 4th May 2009. The gold was purchased on 4th May 2009. The previous year 2009-10. The index number for 2009-10 148. So 148 I have taken. 38,000 into 289 by 148, 74,203. Now subtract. You will get long-term capital gain or long-term capital loss. If you get minus negative figure, it's a LTCL, long-term capital loss. If you get positive value, it's a long-term capital gain. So here 24,87,500 minus 28,90,000, you are getting negative. Minus, that's why I am putting in bracket, and bracket denotes loss. So there is a long-term capital loss on sale of house. Similarly, land के लिए 20,64,150 minus 17,29,060, positive 3,35,090, positive value. So it's a long-term capital gain on sale of land. On gold, 1,25,930 minus 74,203, positive 51,727. It's the long-term capital gain. So out of the three assets, house, there is a long-term capital loss. There is land as well as gold, there is a long-term capital gain. So here we are setting it off, because according to the provisions of Income Tax Act, long-term capital loss can be set off from long-term capital gain. So here long-term capital gain on sale of land 3,35,090, long-term capital gain on sale of gold 51,727. Add up both, 3,86,817 is the total LTCG, total LTCG, long-term capital gain. From that we deduct long-term capital loss. How much is the long-term capital loss? 4,02,500. Subtract it, you are getting negative. Negative figure 15,683. 15,683 negative value you are getting. That means the long-term capital loss cannot be fully set off. Still some part of long-term capital loss is there that will be carried forward to the next year. In the next year again, if the SSC is having long-term capital gain, then only this long-term capital loss can be set off. So the long-term capital loss cannot be set off from any other income. It will be set off only from long-term capital gain. So this amount is carried forward. Long-term capital loss to be carried forward 15,683. He doesn't have any other income. So hence the tax liability will be nil. So this is the end of problem number 20. Come on, the last and final problem on capital gain, problem number 21. Srimati Jyoti, age 42 years, means non-senior citizen. Basic exemption limit is 2,50,000. Owned a residential house at Haridwar city. It was acquired by her on 6th July 2004 for rupees 12,50,000. CII, cost inflation index, was 113. So she has purchased the house in 2004. And during the current year she is selling the house, means it's a long-term capital asset. So gain arising will be long-term capital gain. On 3rd December 2019. That means current previous year. Current previous year is 1920. So on 3rd December 2019, she entered into a contract to sell the house to Mr. Pradeep for rupees 40 lakh and received 1,50,000 as advance. So there is a sale agreement. There is a sale agreement to sell the house to Mr. Pradeep for a sale consideration of 40,000 and received 1,50,000 as advance. Before the due date of agreement to buy, Pradeep expressed his unwillingness to purchase the house and rupees 90,000 advance money is forfeited. So during the current previous year, the SSC Srimati Jyoti entered into an agreement to sell the house to Mr. Pradeep. The consideration price was 40 lakh and Mr. Pradeep has paid 1,50,000 to her. But before the due date of agreement, sale agreement, Mr. Pradeep expressed his unwillingness to buy the house. So 90,000 out of the advance money, 90,000 was forfeited. Now Income Tax Act says if the advance money forfeited is before 1/4/2014, already I have explained you all this detail in the previous video. So if the advance money is forfeited before 1st April 2014, then the advance money forfeited will be deducted from the cost of acquisition. If the advance money is received and forfeited after 1/4/2014, then this advance money forfeited is taxable under the head income from other sources. So in the present problem, advance money is forfeited during the current previous year 2019-20. So that means after 1/4/2014. So this advance received 90,000 is taxable under income from other sources. Now on 2nd March 2020, current previous year, Srimati Jyoti sold the house to Mr. Varman for rupees 60 lakh and state government valuation is 72 lakh for stamp duty purpose. Whenever sale transaction is conducted, stamp duty has to be paid, and that for collecting the stamp duty, the government will put the valuation of the property. So for this house, the state government has valued at 72 lakh, whereas actual sale consideration is 60 lakh. On 15th March 2020, she purchased a residential house in Chennai. That means after selling this house, within few months, she has purchased another residential house. So according to the provisions of Income Tax Act, if an SSC sells one residential house and within the stipulated period purchase another residential house, exemption will be given under section 54. So she is eligible for exemption under section 54 and deposited 12 lakh rupees in State Bank of India under capital gain scheme to construct one more floor in the new house. Compute tax liability if income from other head is nil. So we have to compute the long-term capital gain, tax liability, and if assuming that no other income she is having. See here, exemption under section 54 will be allowed if an SSC has sold one residential house and purchased another residential house within the stipulated period. And apart from that, if the SSC deposits some amount in a bank under capital gain account scheme, then the amount deposited is also eligible for exemption. So in this present problem, she has paid some amount in purchasing a new flat, and also she has deposited some amount in a bank under capital gain account scheme. So both are eligible for exemption under section 54. Now see carefully. Computation of LTCG of Srimati Jyoti for the assessment year. Consideration received 72 lakh. Why I have taken 72 lakh? Here I have given the explanation. See carefully. Sale price of the house is 60 lakh. Sale price. And state government valuation 72 lakh. Now Income Tax Act says, if the stamp duty valuation, if the state government valuation is more than 105% of consideration received, if it is more than 105% of consideration received, then state government valuation will be taken as consideration. Should be taken as consideration for calculating capital gain. Now we have to compare 105% with stamp duty. So how much is the actual sale price? 60 lakh. So 105% of sale price, 105% of 60 lakh, it comes to 63 lakh. If we calculate 105%, it is coming to 63 lakh. Whereas state government valuation is how much? 72 lakh. So state government valuation is more than 105% of actual consideration. So in that case, Income Tax Act says state government valuation should be taken as consideration for calculating capital gain. So 72 lakh. Stamp duty is more than 105% of agreed consideration received. Hence, full value of consideration will the state government valuation, that is 72 lakh, will be taken as 72 lakh. Next, transfer expenses not given in the problem, nil. Net consideration we got. Indexed cost of acquisition. She has purchased the house for 12,50,000. In which year? In the year 2004-2005. Yes, 2004-2005. And the index number at that time was 113. It is given in the problem, 113 index number. Now multiply 12,50,000 into 289 by 113. 31,96,903. Subtract capital gain 40,03,097. This is the capital gain. From this exemption under section 54, now we'll see how much exemption she will get. 40,03,097, you will get the exemption, I'll show it. Then after deducting exemption, long-term capital gain is nil. Zero, no long-term capital gain. Now working note, you can see advance money received and forfeited 90,000 is after 1/4/2014. So Income Tax Act says if the advance money is forfeited after 1/4/2014, then the advance money received is taxable under income from other sources. It should not be considered in capital gain. So here 90,000, this advance money forfeited 90,000 is taxable under that income from other sources. That's it. The assessee sold one residential house and purchased another residential house within the stipulated period. So exemption under section 54 is allowed to the list of the following two amounts. What are the two amounts? Cost of the new house plus amount deposited in the bank under the capital gain account scheme. So she has purchased a house for rupees 38 lakh in Chennai. Apart from that, 12 lakh rupees she has deposited in a bank. So total 50 lakh rupees. Or capital gain amount. How much is the capital gain amount? 40,03,097. 40,03,097. Whichever is least, that is exempted. So exemption under section 54, 40,03,093. So 40,03,093. 97 is the exemption. 97 is the exemption. 097 is the exemption. So long-term capital gain will be nil. Now computation of tax liability, it is asking you to calculate the tax liability also. First of all, she doesn't have any other income. This 90,000 rupees advance money received and forfeited is taxable under income from other sources. So she is having only one income, that is advance money received and forfeited 90,000. Whereas long-term capital gain nil. So the basic exemption limit for non-senior citizen is 2,50,000. So her income is below the basic exemption limit. So entire amount is exempted. The tax liability is nil. That's it. So 21 problems I have explained on computing the capital gain, short-term capital gain as well as long-term capital gain. So my suggestion to you, if you want the complete command on this income tax, because so many provisions are there, you have to remember the provisions. In one glance itself, you will not be able to understand. So watch the video from beginning till the end. Don't skip in between. Have some patience. If you want to get more knowledge, command. If you want to enjoy in gaining the knowledge, have some patience. Watch the videos in sequence. First you see part 1, part 2, part 3. In sequence if you watch, definitely you can enjoy the learning process of this income tax subject. I'm explaining to the best of my ability. And apart from this capital gain, you might have already watched income from salary, income from house property, profits and gains of business and profession. In the next video, I will start the next topic, that is income from other sources. So if you are satisfied with my lecture, give a like to the video. Share it in your group, in your friend circle, so that more students can watch these videos. Give your special comment on these videos, on these lectures. And lastly, don't forget to subscribe my channel if you have not yet subscribed. See you again in the next video on the next topic, income from other sources.